The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out today with Bitcoin, since that's the key phrase going on the TV about every 15 seconds nowadays. The DAX is down very, very slightly today, still in a minor downtrend, but really nothing to do there. We have a lightened session today on the New York Stock Exchange, so it will be a very, very quiet day. I think the big things today are happening in the gold as we've just about hit 1302. We'll discuss that in a minute right after we finish here with the Bitcoin. As you notice, we pulled down from that 61% retracement, which was a perfect Gartley the other day. We got up to 16,400. The exact number on the 618 was 16,289. And now we pulled down to almost the 61% retracement again. And that's going to be the real key, because if we get below, much below 13,000, we've got a chance for this market to really make a huge ABCD, taking it down below the 8,000 level. Folks, this is just a big technical picture. I'm just following it technically. What I know about this is, yes, this is live. It's not Memorex, it's live. Anyway, that's a good story about that, Peter, from Park City. Let me explain to you about Memorex. If you remember the old tape thing, this was back in 1966. I was living in California, and I wanted to buy my it was my first house? Yeah, my first house, and I had some Memorex convertible bonds, and that was really easy because it paid a lot of interest, and I don't remember exactly. Just a long story. Anyway, I sold those Memorex convertible bonds to buy the house, and they ended up going up about 10 times. But anyway, that's neither here nor there. Okay, that's what we're watching here in Bitcoin. I'm not trading this. I'm just watching it. I'm along with John Jameson. I'm looking at about 10 of the cryptocurrencies, but it's really not about cryptocurrencies. It's about blockchain technology, and that's something that we really need to get on and look at. I've had a request to take a look at something that's related to the cold market that we're having, and we owe one of our folks here in the Tiger Den. I'm sorry, I can't remember who it was. It was either Peak D or Fletch. Somebody was talking about this natural gas last week when we were down there at that 1.27, 1.618 at 258. We've now rallied almost 40 cents off the bottom, and just in 5 days. So this is telling you that there's some pretty cold weather coming in. But what we're looking at now is today's high was right at that 61% retracement off the November 6th high. However, with that really big range we had yesterday, folks, you just have to pay attention to that, because that tells you probably want to go higher. When you see temperatures, Rich Anderson this morning told me that it was 18 degrees in Eden Prairie, Minnesota this morning. So that's below zero, by the way. Here in Tucson, we have going to be about 80 degrees, but the wind chill is going to make it around 78. So I guess we'll need a long sleeve shirt as opposed to a short sleeve shirt today. But boy, I tell you, I cannot take the cold weather, folks. I remember, long time. Anyway, let's take a look at a couple other things here this morning and go down memory lane. I wanted to bring up the chart of the, let's just get this up and take a look at it. This is the, shucks, I got this wrong. Hold on. You got to bear with me here a little bit. I made a little typo error here. No, I don't remember the Wabash River ever freezing solid. I really don't. But Norm would probably remember that more than I did. But I don't remember the Wabash River. Oh, shoot. I kind of stayed away from that place because I'm not a water person. Anyway, let's look at the Japanese yen versus the U.S. dollar going back about 30 years. I want you to take a look at that high back in 1989. That's when it was trading at around 157. I happen to have a very interesting story about that. One of our very dear friends over in California ran a company called, it was one of the large pump companies. I don't remember which one, hydraulic pumps. And it was in El Monte, California. He had a really nice, it was an old factory, but just absolutely in perfect shape. He had great labor coming in from Mexico. Everything was running smoothly, and he was ready to retire. And he did retire, and the new executive coming in wanted to move the factory to Florida, mainly because he liked to play golf and he had family in Florida. And so being chairman of the board, new chairman of the board, he moved it to Florida, and 4 years later, they went tapioca. They couldn't take the higher labor costs and everything. But the reason why this is important, because when we got to that, he called me up. This was around New Year's Eve, as a matter of fact, in 1989, and he said, I want to, see the Japanese yen go down versus the U.S. dollar. And I said, well, just go to the futures market. You can see it was trading around 157. And I said, put a 3-point stop on it at 160. That's $3,000, and see what happened. And he held it for about 3 years and made a really big, pretty much, we'll say, really big trade. I'm reading things in the den at the same time. The Niagara Falls has frozen over. It was in 1903. I remember seeing the falls totally frozen over. That's just very, very rare. But, I stay away from that area of the country as best I can. But we'll see. Anyway, we'll move on to some of these other things and go on. One of the things that someone asked me about most memorable times of New Year's Eves, of course, another one was in 1989 also, when the Nikkei Dow was almost at 30,000. I don't believe we were trading Nikkei futures at that time, but I remember the situation in the end with Emil, and what was the other part of that story? Oh boy, let slip my mind. Well, not going to worry about that. Anyway, let's move on to a couple of things that we want to take a look at this morning are the currency markets. I better go to the gold market. I'll go to gold first, folks. This gold market's got flat out legs. I mean, we're trading. We're above the high of November already. I mean, this thing is really going to go. What you need to do is to look for a retracement here. We're going to get one. I don't know if it'll be in my lifetime or not, but watch for about a 2 or 3 day retracement here. This thing is really starting to move. And we're starting to see a little bit of move in the silver market too. It's beginning, to show that it has a possibility of going higher also. Platinum is still lagging badly, but silver is ratcheting up also. So the key is to watch these retracements, and we will get them. I mean, well, let's be a little realistic. Maybe we won't get them. I don't know, but we want to watch it very, very closely here, because these currencies have a really strong tendency to change directions around the first of the year, and the first of the year, folks, is 2 days away. All right, live every day in an attitude of gratitude, and call in 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at the euro. Let's go back about 40 years. Going back into this was long before the euro, folks. The euro really didn't start until 99. And this is basically the Deutschmark is when you look at these old prices, way back in that era. If you'll notice back in 85, it got down to 57. That was at the Plaza Accord in the Plaza Hotel in New York. That was a huge change in everything. And then also, if you would go back even farther into 1970, 71, 72, it was trading at around 25. That's what, if you'd have bought a Mercedes or a BMW or a Porsche, I mean, you were basically going long, the German mark. And that's why those cars became so very expensive, because the price of the mark kept rising. And if you bought the car, the price went up. So you got your money back. And then we'll see what's going on. So we'll see how that's going on as we move on. However, if we look at this chart on the monthly chart of this euro, you can see here the cycle that I had in here about 6 or 8 months ago. You can see that it was a beautiful 16-year cycle that bottomed right at the 707. And if you look at it closely, you'll see that the last bottom also bottomed at the 707. That was the one that bottomed in 2000. And then what we made a big ABCD pattern with a big 1.27 up at the 161 level. Now we've coming down here. The key here is that breaking of that trend line that we had around the 112, 113 level. And then after that, we had the pullback to 115. That was the very bullish 382 pullback. And now, folks, we've hit above 120 again. We needed to get above the 121 level to be a good breakout, but if we break out strongly above this in the euro, we're going to be looking at something, very, very powerful, and almost as powerful as what we saw in 85 and then also in 2000. This could be, really hurting the dollar, which is going to hurt, a lot of people that do exporters, like people that do beans and corn and stuff like that, because they're not going to be getting as much money for their products because the dollar, is going to be weaker. That's not going to be good for them, but we'll have to wait and see what's going to be going along. We'll see. Okay. Anyway, we're going to be seeing we're getting Twitter. Twitter. I've never done any social networking, folks. I don't plan to either. So I'm a dinosaur, but I'm an old dinosaur, so I'll just have to live. I just don't do social networking, and I know a lot of people do. All I know is that when you're walking down the street, everybody's texting, and I don't even do any texting. So we'll see what happens with that. Regarding the euro, we have to take a look at this U.S. dollar. One of our good friends came through today with a couple of questions, and that is this U.S. dollar in a bull market, folks? I don't know. All I know is that we're coming down to a very, very critical level here in the U.S. dollar index. We're trading below 92 now, I believe at 91.95, at 91.60. We're going to be coming down to a ABCD correction, and it's going to take from September to January. So you're looking at a 5-month correction. It's going to have some very, very interesting symmetrical time relationships between November and December and January. So we want to be watching this very, very, very closely. Anything below 9,100 in this market tells you that we're going down big time. And this U.S. dollar index, has had one heck of a run over the years, and it could start down to get to a level that it hasn't seen, in a very, very long time. So these are some of the ones that we want to keep an eye on coming into the new year. What I do for the new year is I look at the long-term monthly charts on these foreign exchanges, and I use them in the newsletter to give you an idea of the overall look at what that looks like as far as a long-term prognostication. And prognostication means a wild guess, and that's what it is a lot of the time. I wanted to show you the chart of silver because we're still in a downtrend, but we're starting to move up. You'll notice that the gold has already taken out the November highs. The silver hasn't. That's one of the reasons why I believe we're still going to get a correction in here, because the platinum and silver are lagging behind the market. But until that happens, we have to wait and see. Nothing can be as frustrating as a sold-out bull, of which I happen to raise my hand. No complaints, but we'll be watching it very, very closely here with these things. Far as the grain market, someone's asked a question about the grain markets. Folks, I really feel comfortable looking at the long side of soybeans and corn in here. Wheat has already started to move up, but it begins to look like, let's just put up this chart of the January soybeans from this week's letter, and we'll take a look at it, and you'll see that we're right down at that level again. Fact is, we went a tiny bit below that. We're trading above it right now. We got down to 46 last night after we hit 64. Then we came back down to 46. So I still like this in here, but we've got this big Astro date coming in here on Monday. That'll be actually Tuesday, the 2nd. So the 2nd and 3rd are those numbers, the days that Norm Winsky talked about that are so very, very powerful. And I certainly want to be looking to be a buyer of the grains, especially the beans. And the reason why is, we've been down 13 days. That in itself is a very unusual phenomenon. So we'll watch that as we look at some of these things. Thanks a lot, Mr. Z. You're correct. We did roll over to the March soybeans. We want to get into March because we're coming into January now, and you don't want to mess with those. But we'll be rolling over to March soybeans, looking at those on Monday. I wouldn't be doing anything today. Anyway, the stocks are still going higher. Like we mentioned at the beginning of the week, it's really difficult for the market to go down the last few trading days of the month, especially when you're in the 8th up month and the 6th up week, or whatever it is. I forget. It's just amazing. The market just keeps going higher and higher, and maybe it'll go up forever. This will be the first time that Mr. Newton will be wrong, but who knows? If you want to have some fun, we asked Norm Winsky yesterday about, who was the first astrologer to talk about the retrograde motion of the planets, and it was Johann Kepler. And if you go into Kepler and Google this thing, you're going to be really you'll be really surprised. Hold on, just to see if I can get this to come up here. Yeah, I'm gonna put it into the room here. It's a article about Kepler, and they thought he was murdered by one of his underlings because he wanted to take credit for the retrograde motion of the planets. Remember, they lived back in the 1570s. That was long before Isaac Newton. So it's really an interesting article. You talk about something for movies. That would be something would be interesting, to take a look at. So we'll be watching that one on the movies one of these days. By the way, if you get a chance to go to the movies, folks, go see the movie The Darkest Hour. I think you're going to see the greatest performance I've ever seen by an actor. Gary Oldman plays Winston Churchill, and I mean, you cannot tell it's not Churchill. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
I've been trying to be on for a week, and
I know you're swamped, and now I get you got your space heater going on in your house, right? With 18 below this morning.
Yeah, it's just ugly. I mean,
wow.
When your highs are going to be 10 below zero, that's ugly.
Don't you usually head south down to that Naples area
I know
this time
that.
of the year?
See, I don't know why you're talking to me when I've got a beautiful place in Naples and I'm sitting up here freezing my rear end. I obviously don't know.
Well, you got a lot of family up there, that's for sure. Hey, Rich, tell us about these grain markets. What's your feeling here on beans? Do you have any?
Well, there's a report out the second week in January. USDA will come out with a report, and that's the next big news item that can rattle things around. And then you've got the weather in South America, which we had some concern about it. That caused a little rally, and now you've had the sell-off as the weather improved a little bit. But the weather, it's like July, August, the peak time of the year when we determine the crop size. That's their equivalent, and so everybody's going to have their eyes on the weather. It's not unlike the stock market. Volatility's just gone to zero. I mean, look at the implied volatility of some of these options on corn and beans. And then the chart I sent you the other day showing the price of commodities versus stocks and how, we're at a value level. So
we certainly are. We haven't been at this level
right
for
now,
30 years, have we? It's been about 30 years since we've been at this value level?
Yeah. I mean, I believe that the major hedge fund money management guys did in their rebalancing decide to allocate, maybe from instead of 2%, maybe 4% into commodities. And that's all across the whole spectrum. But that extra flow of funds is going to make a huge difference. But they don't do that then until January. But you have some things like everybody knew there was cold weather coming, right, Larry? I mean, if
Yes.
you were a weather guy watching the weather, you knew we're going to get blasted with cold weather. Yet it was only yesterday that natural gas lit a fire because of the cold weather.
Yeah.
An example, we know that in rebalancing that they're going to be buying a bunch of Kansas City wheat. We know that the funds are big shorts, So once they start to buy that wheat, I think there's going to be some difference made. And that happens starting next week. We know, as an example, that the Goldman Sachs index on their roll, which starts the fifth business day of the month preceding, so for February cattle will be in January, that they're going to be reducing down the size of their cattle position because they rebalance, on a yearly basis. And that's going to be 15 to 20,000 contracts. Well, 15 to 20,000 contracts in a big market like currencies or crude oil is nothing. But in cattle, that's a big percentage over 3 or 4 days, and that's where I see opportunities. But the bottom line is you look at last year. Everybody thought the euro was going down and the dollar's going up. If you trade technically, you had a great year. If you listen to fundamentalists, they're paid to put out information, not necessarily knowing any more than any of the rest of us, but they're a good writer.
One of our questions just came in, Rich, about that. You were talking about the dollar. Do you have any information why the euro is rallying so strongly here at the end of the year?
No, I haven't really, I've just kind of, between my Thanksgiving and New Year's, I always try and just ignore the markets. I'll have to get back to you on that. I don't know, but I can find out. I personally think that it probably has something to do with the new tax laws. So since Trump's taken office, the stock market's gone vertical up. Well, the dollar didn't have such a good year this year. And frankly, it could be the beginning of several years of where the dollar declines, which, as the dollar gets cheaper, it makes our stuff, more attractive. And that and the weather is what will eventually take these grains out, because the cure for low prices is low prices. And we have them in, below the cost of production in, some of these grains. And frankly, the reason copper's up. Copper's up because China closed their largest copper production thing because it's coal burning for smog reasons. Oil's up because there was pipeline problems in Scotland, and then there's an explosion in Libya. These are temporary things, and these create opportunities. And then you look at the charts, and you look for your triggers and identify your risk, and take your calculated risk.
Well, that's what you have to do, is because these markets are getting pretty volatile. Rich, we have a question about the cattle. The last time we had you on, they were trading at about 119, and you thought they had really good value there. And now we're up at the 122 level. And the question that someone's asking is about the feeder. Can you look at it over the next couple of weeks or months?
Well, with my cow-calf operation, I always tried to sell my calves in the second week in January because that was typically the high.
Mm-hmm.
And,
seasonal.
And the feeder cattle then typically, went down. With the dryness in the cold weather in the Southwest, they'll be taking maybe a few of these calves off the wheat pasture because it's been so dry. And so there'll be an increase. I believe there'll be an increased movement, and that will put pressure on the markets. The cheap corn is helping, but the cheap corn's been cheap for a long time, so that's not really an issue. I think the fat cattle have value at 105 to 110, and they're 122, but we have the December cattle going off the board today, and they're 125.60. They're $3.60 over February. If you look at the differential, 3 or 4 weeks ago, February cattle were $6.50 over December. That's how I make my money.
Well, those spreads get out of line. Boy, that really is a
they'll go
big
from
thing.
650 to 350 over, 650 under. That's a $10 move. And when I very first got into business, guys used to tell me, you look but you don't see.
Mm-hmm.
I eventually, after 15 or 20 years, kind of caught on to what they had been trying to tell me.
Amen to that. Rich, we have another question, and that is about the gold and silver, or particularly gold, not so much silver. You have any feelings on that? I mean, this thing is it's moved over $50 an ounce here in the last 2 weeks. That's a pretty big move historically at this time of the year, isn't it?
Absolutely. But again, it's priced in terms of dollar, and the dollar's been cheaper. But I think the more important thing and the big macro thing is that gold and silver nobody cared about because Bitcoin was the hot deal. And I know nothing about Bitcoin. I'm not saying I do, but I read and listen to lots of different things, and now Bitcoin's like 42% of the market, and all of a sudden some people are thinking because Korea might do this or that. So at some point the light's going to turn on. They're going to think, well, that's not necessarily as good a storage of value as gold or silver. And when they figure that out and they start flowing the funds back into these precious metals, they can take off. And when silver gets above 19, I think it can go into the 20s. And I'm not a metals trader. I'm just looking at charts. And I'm just looking at weekly and monthly charts at this point.
Hey, can you stay with us for a little bit longer? We've got to pay some bills. 877-927-6648. Rich Anderson of Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management. Rich, we've got a question about the interest rate market. The last couple of weeks, the LIBOR rate over in London was up like 20 days in a row, and that sold off our bonds and notes. What's your feeling here, where we stand now in the notes and bonds and longer term? Do you have an idea?
Well, again, I'm not an interest rate expert, and I would suggest you look at the charts, but to me, I think that people are underestimating the drawdown of the Fed balance sheet this year, which will be like $450 billion. And I think that will eventually start to put a little bit of a drag on the stock market and cause interest rates to go higher. You saw the yield curve, the talk is about it flattening and stuff like that. I mean, I think we could see interest rates go higher and yet have the dollar go lower. I think the interest rates go higher is probably only like a 1% move would be huge at these levels because we're at such low levels. When you're at 10% interest rate, a 1% move is not very much, but when you're down here, that's a lot. But I think it can be 3/4 to a point, and that'll give you some huge swings and opportunities. And I wouldn't be surprised to see that the dollar get down in that 87, 88 area. And again, I don't trade the dollar very often unless I see a setup that I like.
Rich, we first met each other back in the early 70s, and interest rates were, I think, 11, 12% in T-bills. Yeah, I know you were just a kid. But anyway, the thing, did you ever believe that we would see, negative interest rates in some countries and, T-bill rates at under 0.5%? I mean, that's just hard to believe that many years ago that this could possibly happen. The bonds were trading at $55.
I know.
And they went to 170 for heaven's sake.
This long. Keep in mind that, there's a whole, let's call these last 10 years of traders, they haven't seen it when money's coming out of the system. They've only seen the wave coming, the tide rising. They haven't seen the tide going out. There's a bunch of traders that, they're going to have to learn that the markets can go both ways and that, this low volatility will be followed by high volatility. And I think that there's some underestimations of that in the larger trading community. And there's always something out there. There's something out there, obviously, about the euro and the interest rates over there. Well, there's so much information. It's like drinking out of a fire hose. You can't do it. But what you can do is look at the charts, focus on a few markets, focus on your patterns that you've observed, give you a probability of success, knowing that no one trade is guaranteed to be a winner, but at least you've got a calculated risk.
Yeah, that volatilities can be a double-edged sword. It's like it's not as much fun in hunting when the rabbit has the gun.
You got that right.
That's for sure. It can work both ways. We haven't seen much in volatility. In fact, that's been one of the bigger bubbles that they talked about this past week in Bloomberg. The fact that the volatility has been down for so long that and every time it gets down here, they always talk about it being useless, and that's when it usually says, "Hey, look at me." So we'll have to wait and see if this is.
But that's true across the board. You've got cheap implied volatility in these grains that's unbelievable. I mean, in a normal year, buying this kind of volatility is absolute steal.
Okay, Rich.
Normally bottoms in February in the grains and then pops up into the summertime as you have concerns about weather.
Rich, how about the cost of production here in the corn? Where do we stand there as far as I talked to Cy about a week ago? He's on vacation this week, but I think we're pretty close down here in March corn, aren't we? Around this 340 level?
Oh, absolutely. But we're looking at the board at 340. But if I'm a farmer in South Dakota, I'm looking at the price the elevator will give me, and that's closer to $3 or under.
Oh, wow.
And even in Quad Cities, 10 miles from the river in Iowa, because they had 250% freight, the basis had gotten to 50 under, which that's unheard of. Basis improved some now. But the price the farmer's getting is way less than the board, and that's below the cost of production.
Mm-hmm.
That's why there was an article in the Wall Street Journal a week ago or so about farmers committing suicide.
Oh dear. How about the cost of their land, though? Didn't the land go up?
The land stayed pretty firm because the old guys got the cash and they pay cash.
Yeah.
And so they don't. If you're paying $10,000 for a acre of land, and most of your land you've bought for $500 to $1,000, well, you're blending that in. That's to you, it's not so much.
Mm-hmm. What about do you know much about the cocoa market? I haven't traded cocoa in 40 years. We've got someone asking a question about cocoa. It's making a big ABCD pattern on the monthly charts down here around 1800, I guess. And I just wondered if you know much about it.
No, I know that there's a good amount of it traded in Ghana, and I know that the flows earlier in the year were back in June, and that probably has something to do with the harvest and marketing cycles, but I'm not familiar enough with that to even be dangerous. What I would tell you is that I think that it's likely to test this 1780 low on the monthly charts, and successfully test it, that'll be the time to buy. That seems to be the way the hedge funds trade these days. They love to run them up to the highs or run them up down to the lows, and then finding that there are no buyers or no sellers, they reverse the position, and that's how they make a lot of money.
Yeah, they do. Most of the hedge funds now do a lot of technical work, don't they, Rich, or as opposed to fundamental, or do they do both?
Algos, absolutely. And those algos, I don't know how much you know about Google's DeepMind.
No, I don't.
That's an artificial intelligence thing. The short of it is the game Go. They thought it'd be 10 years before artificial intelligence be able to play the Go Master, which is a Chinese checkers game that's very complicated. Anyway, it took less than 3 months before they were playing a master, and another 3 or 4 months after that, they actually beat the world champion. And then they took another artificial intelligence, the AlphaZero was the name of this one, where they just gave it the rules of Go and no human games. The previous ones they'd had it watch human games and then play itself. It beat the one that had beat the world champion 4 out of 5 games 100-0. That's what artificial intelligence and algos can do. So you've really got to find your time frame. You can't beat them on the short term because they got too many edges. You got to find your time frame that you're comfortable with.
That's what Jim Simmons and those guys at Renaissance and Andrew Lowe and stuff at MIT do with their quants, isn't it? They do a lot of this.
Right. And all of them. I mean, Google's spending over $100 million a year on this DeepMind artificial intelligence group.
Wow.
It's unbelievable. You've got to know your time frame that you can compete in because you're not going to be able to beat them in anything very short term. I can guarantee you that.
Yeah, I can understand that. That's the way it usually goes. Rich, I want to thank you for coming on today. I wish you and Lisa a very, very happy New Year. Hopefully we'll get to see you again this year like we usually do. And when do you be heading down to the abode down in Naples? Right after the first of the year?
I hope so. I hope so.
All right, listen, Happy New Year to you, buddy.
A very Happy New Year, and they have a wonderful group of speakers to listen to.
Hey, thanks a lot. Rich Anderson, Anderson Capital Management. We'll be right back to wind up the year.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and actually markets turned around here a little bit. It would be very unusual to see the market close sharply lower today because it'd be silly for someone to sell stocks now when they can sell them on Tuesday and not pay taxes for 18 months. I don't understand how that works, but anyway, that's the way it looks. I'm not even sure how those tax things work with the stock exchange anymore because I haven't done anything in those for many, many years. Anyway, we'll not worry about that too much, but keep in mind that we've got a whole lot of gaps in the Dow Jones Industrial Average, folks. Whether this will be the year where the gaps will be filled or not, I'm not sure. But if you just take a look at this chart that I'm going to post here, you'll see that we have about 9 gaps just going back over the past year that haven't been filled. We've never seen anything like that in the Dow Jones Industrial Average in its 160, 70-year picture. So we'll see how it ends up. But we probably will have more volatility coming in next year, something that we haven't seen in quite a while. Regarding the question here been asked about the Bitcoin. Folks, there's in the open interest in the Bitcoin is still under 1,000 contracts. at the CBOE and at the CME. So people are just warming up to it. But the people that have been trading Bitcoin are not your normal commodity people, folks. These are just the people, the high-tech people, I think, that have been, or even non-high-tech people, and they trade it off these off exchanges where they're not even registered. So it's a wild, wild west, as we say. John Jameson will be bringing out his letter in the second week in January, and I highly urge you to take a look at that because he really understands, this blockchain technology, and he's following about 30 or 40 of the cryptocurrencies which he thinks have the best, and each one of them have a little bit different wiggle to it, and or a way of looking at the market. So it'll be something to be interested in. But boy, it is a wild, wild west, that's for sure. Listen, Happy New Year to everyone, and may God bless and live every day in an attitude of gratitude and do something nice for someone that doesn't have as much as you. Happy New Year, everyone.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.